Hello, I'm John Cutler. Welcome to This Week in the Markets. With the Federal Reserve meeting next week, meaning that there is a silent period for Fed appearances amongst its officials, the markets still have plenty to digest: corporate earnings, geopolitical events, and economic data. All told, the stock market stayed in a correction territory, with the S&P and the Dow Jones Industrial below the 200-day moving average, with the Nasdaq now coming close to hitting its 200-day moving average. Though corporate earnings have coming in nicely and forecasts for 2024 have been initiated, the markets still are digesting so much uncertainty that the corporate earnings themselves have not been enough to put a floor underneath the market. For its part, the bond market continues also in correction territory. The interest rates have risen 10-year at 5% now, with the 2-year more tethered to the federal funds rate staying in and around 5.15 to 5.2%. Therefore, the inverted yield curve is still inverted, but it's narrower. With all eyes being on Federal Reserve next week, it's not so much that they expect a rate hike next week, the markets. They're looking for higher for longer, but they're also looking for some sort of clarity for December or January's meeting and its 2024 forecast for the Federal Reserve. The press conference for Jay Powell will certainly be scrutinized by both the stock and bond market. I'm John Kreitler. This was This Week in the Markets. Have a great week.